Good afternoon, everyone. Thank you for coming all the way to Fukuoka to join the G20 high-level seminar on financial innovation. My name is Akiho Nagano from Japan Financial Services Agency. I will act as the MC today. To start the seminar, Deputy Prime Minister Aso will deliver the welcoming remarks on behalf of Japan. Deputy Prime Minister Aso is on the way. Let's welcome him with a big round of applause.
Sorry, good afternoon, and keep waiting. Well, good afternoon, everyone, and welcome to my hometown, Fukuoka. As a matter of fact, not exactly for homework, but a bit too away, about 20 kilometers from here, where I was born. And Fukuoka is blessed with a mild climate and delicious food, and a well-developed international city, thanks to its closeness and strong links to the rest of Asia. I am particularly pleased to host this seminar here, given the city's effort to promote the fintech. Financial innovation in one of the G20 finance track priorities under Japan presidency. In this seminar, we will first discuss how technological advances are transforming the financial sector. We will then focus more specifically on the distribution ledger technology, so-called DLT, such as blockchain, and discuss the implication of the financial system. We are honored to have Madame Christine Lagarde, Managing Director of the International Monetary Fund, deliver the keynote remarks. Thanks, Christine. I am sure that we will all benefit from her insight into the issue posed by the financial innovations. In the first session of the seminar, we will explore the opportunities and risks of the financial innovation. We have invited distinguished speakers from the financial industry, as well as global IT firms which are leading the innovation. To help set the stage, let me lay out some of the potential benefits of financial sector innovation. First, the rise of the big data, artificial intelligence, and machine learning could expand the availability of customized financial services. These type of services, which are traditionally been limited to wealthy individuals and big corporations, may become available to a broader customer basis. Second, mobile banking will allow unbanked people to access the financial service at a lower cost. This could contribute to the greater financial inclusion in developing countries. Third, cloud computing could eliminate the need for the massive IT capital investment which have been required to conduct financial businesses. This could lead to easier entry for startups as well as greater business agility for incumbents. Fourth, distributed leader technology could lead to networks that directly link financial customers or market participants potentially increasing the efficiencies and the reducing cost. But of course, if technological innovation transforms traditional business models, it may bring more than just benefit. We need to stay vigilant against a risk or challenges. For example, how do we strike the right balance between making the best use of data while protecting the privacy? And how do we ensure the cybersecurity aimed at growing dependence on technology? Finally, could innovation bring about the new form of the financial inclusion? For example, if machine learning encodes the existing biases and prejudice. I hope today's discussion will provide you with some clues to answer these questions. Session 2 focuses on the distributed ledger technology, or DLT. There is a famous quote by Bill Gates from 1994. Banking is necessary, but banks are not. A quarter century later, we still use banks, but this may not be the case in the future. DLT may allow for the provision of the banking service without banks. In such a future, financial regulator may no longer be able to rely on the regulation or intermediary financial institution to protect the public interest. This could pose challenges for financial stability and consumer protection, among other issues. In session 2, we will hold a panel discussion among the group of experts from the regulatory community, academia, financial industry, and technological community. The panel will explore the possible multi-stakeholders approach for the governance of the DLT-based financial system. I hope that this seminar will provide valuable input for the G20 finance ministers and central bank governance meeting. I look forward to an active and constructive dialogue. Thank you very much for your kind participation and attention. Thank you.
Please give him a big round of applause. Thank you very much, Deputy Prime Minister Aso. Now, the Managing Director of the International Monetary Fund, Christine Lagarde, will deliver the keynote remarks. Let's welcome her with a big round of applause.
Well, distinguished guests, ladies and gentlemen, good afternoon. Minasan konnichiwa. I would like to thank Japan's Financial Services Agency for the opportunity to address the topic of fintech and the impact of the digital technology in the financial sectors. I think it is very appropriate, actually, to have that debate in Fukuoka. Not so much because it is the hometown of Deputy Prime Minister Aso, and as I understand, Governor Kuroda as well. That would be a reason enough, actually, to have the discussion here. But also because Fukuoka is home to many, many startups. And if my numbers are correct, there have been more Japanese startups started here in Fukuoka than pretty much anywhere else in Japan, including in some far more well-known and reputable cities in Japan. So perfectly legitimate that we discuss those issues here. It is also very legitimate that we discuss the issues of fintech and the digital technologies applied to the financial sector in Japan and in Asia in more generally, because it is where both perils and promises of fintech have actually revealed themselves. It is in Asia where innovation in digital payments and verification systems were first launched and, more important, became actually mainstream. But it is also in Asia that we saw the darker side of fintech, with particular concerns for consumer protection and privacy concerns that have been bubbling on the surface of the digital techniques applied to fintech. And this has been the case for a few years now. Asia, like the rest of the world, is actually facing a defining moment. How to manage the risks of fintech without suffocating innovation that is inherent to the techniques that are being applied to the financial sector. How to keep up with rapid financial innovations while making sure that consumers and investors are duly informed and feel secure in their investment, and that the fundamental concept of trust and confidence is actually maintained. Technology always has and always will spur innovation in finance. You can go back as long as you want, it has been the case. And there are some excellent central bankers here who know that and have written extensively about this particular matter. The real question is to know whether those innovations will actually benefit all, or just a selected few. If handled correctly, we believe that fintech can actually cut the cost of utilizing financial tools and can enable millions to fulfill their aspirations of building a better life by simply having access to finance that they would not otherwise have had. And that is why I believe that it is our shared responsibility to actually create a safe, sound, sustainable, and inclusive financial system that is protected from criminal abuse and actually from all abuses. That will be the condition for maintaining that relationship of trust that is inherent to the financial sector, and in particular to credit. It's actually the root of the word credit. So what has the IMF got to do with that? Well, it so happens that the IMF, one of the key missions of the International Monetary Fund that I have had the privilege to lead for the last 8 years now, one of its mission is to actually control, monitor, enhance the stability of the system. The financial stability is actually embedded in the articles of the institution. So what we started working on about 4 years ago now is these sort of emerging new trends that we were seeing, obviously in countries like Japan, where new crypto assets saw the light of day, but also in countries like Kenya, like Rwanda, like a few of those African countries where the penetration of banking sectors had not been optimal, to say the least, and where a lot of the population was excluded from access to finance. And where suddenly, by virtue of mobile banking, a much larger number of people were included in the financial sector. It was materialized even further when, at the request of the membership about 2 years ago, we started looking into the key principles that should actually be examined by government, by policy authorities, before they could actually guarantee their voters, their consumers, their compatriots, that it was safe to operate with those tools. And this is how we really worked on the Bali FinTech agenda. So I'll spare you the endless discussions that we had with several authorities as to whether it should be called an agenda, or whether it should be called principles, or whether it should be called guidelines, or whether it should be called framework. I think there was probably, in retrospect, and this is my personal view, there was probably a little bit too much inhibition and too much timidity on the part of some policymakers to actually be a little bit more directive, a little bit more prescriptive. Therefore, the word agenda was preferred to that of framework or guidelines. We shall see whether that was the right decision or not, but some of us believe that there might have been a little stronger appetite to actually identify more clearly what were the points that were sensitive and that required more regulation. But anyway, together with the World Bank, we developed the Bali FinTech agenda, and that agenda identifies 12 priorities that countries and other international organizations should focus on in the FinTech space. So that was all well and done. What we then decided to do was to actually survey our membership and examine whether or not those 12 points in the Bali FinTech agenda were relevant from their perspective, and whether they were particularly concerned or not concerned at all about the FinTech developments. So we went about, and from the various countries in the membership, we circulated a survey, and our findings will actually be released later this month. It's a joint findings by the IMF and the World Bank, and it's a paper that we will be releasing at the end of June. But what I would like to do this afternoon is maybe give you a couple of highlights, a little sort of sneak peek, if you will, into some of our findings. Incidentally, 96 countries participated in the survey, so it's a fairly relevant series of countries that responded. The first overwhelming response that we got from those 96 countries was that they thought that FinTech was very transformative for financial inclusion. Those countries recognized that inclusion plays a key role in promoting growth, opening access for poor and rural communities through lower costs, and facilitating women's participation in the formal economy. Now, indeed, as IMF research shows, FinTech has helped to close the inclusion gender gap in some countries, but unfortunately not everywhere. Gaps in access to technology are one explanation. But even when access is equal, there appears to be lower usage by women. For example, in Egypt, in Ethiopia, in India, men are 20 percentage points more likely than women to have their own mobile phone. In Bangladesh, men are 22 percentage points more likely than women to have a mobile money account. And women also tend to use digital services less so than men, at least in some countries, possibly due to social norms or issues related to affordability and financial literacy. That is why we believe, if we have to sort of draw a lesson from that, that financial literacy can play a key role in generating higher gender participation in every economy. I was incidentally delighted to read today that the Australia FinTech industry is actually very keen to recruit in the women category, so to speak, simply because there is more workforce available, including if that workforce is actually trained by those FinTech service industry. Second finding, countries are asking for greater international cooperation in FinTech. Nearly 80% of them mentioned cybersecurity as their most important priority. 60% of them listed anti-money laundering, legal and regulatory frameworks as very high on their agenda. And another 40% mentioned payment systems, including cross-border systems, as one of their key concerns as well. And those issues, let's face it, are already debated in various forums. And the financial, the FSB in particular, is very focused on those issues, and I know in this room, Mark Carney, for instance, former head of the FSB, has recently published a very, very eloquent and documented paper and given a speech on this matter recently, which was extremely interesting. But there is a lot more that needs to be done in the field of international cooperation. Do you know, for instance, that crypto assets has different definitions in many, many countries? And even among the countries of the G20, there is no consensus at the moment on their regulatory treatment. Is it an asset? Is it a currency? Is it, I mean, there are multiple definitions. They abound. The same is true about another issue that is discussed in our review, and that is market concentration. Now, I know that there are representatives here in this room, and they will be speaking on some of the panels today, from tech firms, very large ones, that will eventually be disruptive in the financial landscape, because they will be using a lot of their ample resources, as well as massive access to data, in order to actually penetrate a field where there is market share that is for grab. And that is a welcome sign of competition, but I predict that there will be a race to opportunities, because that's one of the themes that we are looking at the moment, where central banks with digital currencies, where the big tech companies with whatever coin they want to develop in the future, and where some of the largest financial establishments are all going to compete for a market that is in accelerated development as we speak. Now, these developments are good. They hold out the promise of accelerating inclusion and modernizing financial markets. But they raise, in addition to privacy issues, competition and market concentration concerns, both of which could lead to vulnerabilities in the financial system. China's technology industry is a prime example of this trade-off between benefits and challenges. Over the last 5 years, technology growth in China has been extremely successful and allowed millions of new entrants to benefit from access to financial products and to the creation of multiple new businesses and sometimes very good quality jobs. But it has also led to 2 firms actually controlling more than 90% of the mobile payment market. Worth considering, especially if you believe that competition is actually healthy and will spur productivity gains. Now, this presents a unique systemic challenge to financial stability and efficiency, and one that I hope we will be able to touch upon during these G20 meetings under Japanese presidency, and that we will be able to address in a cooperative, productive way, reaching out to those new entrants or those disruptors in order to actually arrive at something that is satisfactory and efficient, does not stifle innovation, but also guarantees the stability and the security of both the financial system and that of its consumers. So let me conclude here. Everyone here and many around the world recognize that it is critical to continue the international dialogue on fintech, but it is not as easy as it seems. Integrating different national approaches to crypto assets, non-bank fintech intermediaries, and the governance of data are crucial if we are to harness fintech's potential to promote greater financial inclusion and development. Yet at the same time, we have to find a way to preserve financial stability and integrity, protect consumers, and increase financial literacy. Finding the right balance between all those imperatives will actually be our task and our challenge. And here I think we can draw inspiration from a lovely Japanese proverb which says something which I will not say in Japanese because I would be totally offensive to your beautiful language. But in English version, it says something like, walk across the stone bridge, but only after you have tested its strength. So we have to cross that bridge together, but we have to make sure that this FinTech future bridge is something that is solid enough so that we can all walk on it for the benefit of everybody. And events like the one that you've organized here are perfect occasions to actually explore the solidity, the precautions, and the right balance that we must have crossing that bridge. Thank you very much.
Thank you very much, Managing Director Lagarde. Now, we would like to move on to session 1. The topic is opportunities and risks of financial innovation. Let me introduce the moderator and panelists. Please proceed to the stage in the order I introduced. The moderator is Mr. Ryozo Himino, Vice Minister for International Affairs, Japan Financial Services Agency. The keynote presenter is Mr. Nobuyuki Hirano from Mitsubishi UFJ Financial Group. The presenters are Mr. Cesar Sengupta from Google and Mr. Michael Punk from Amazon Web Services. Mr. Himino, the floor is yours.
Okay, good afternoon, everyone. Let's start the first session. As Deputy Prime Minister Aso said a few moments ago, this session explores opportunities and risks technological innovation in financial sector can bring to the world. We have 3 great panelists and have about 50 minutes. We use the first part for brief presentations by moderators, and then we use the latter half for discussion. And toward the end of the session, we plan to take questions to panelists from the floor. So while listening, please think about as difficult question as possible to pose. Yes, and so let's start with Mr. Nobuyuki Hirano. Mr. Hirano is the chairman of the biggest banking group in Japan, MUFG. He worked as a banker in Brussels, London, New York, and even in Tokyo. He's on the board of Morgan Stanley and Toyota, and I think I can say he's well known for his straight talks and independent thinking. Mr. Hirano, floor is yours.
Good afternoon, everyone, and thank you very much for your kind introduction. Well, I'm not quite sure I can be straightforward today, but I try. Now, with the establishment of the Financial Stability Board, this year marks the 10th anniversary of the post-global financial crisis regulatory reform agenda. During these 10 years, we have experienced a significant change of financial services by technology-driven innovation, and it's still evolving with exponential speed. I'd like to share my views with you on the opportunities and risks financial innovation may bring about from a perspective of banking industry. I'm sure nobody here doubts that financial innovation will be a powerful tool in overcoming mounting global social and economic challenges, as already Madame Lagarde described. Let me give you an example. Rapidly aging population, in particular in this country, is notably the common social economic challenges faced in developed countries. By 2045, Japan's working age population is expected to decrease by 20% or even more. In turn, younger generation are confronted with the needs of building financial assets while they are working, rather than relying on a pension after retirement. Because it may be controversial, but the reality is that what they can expect as recipients of pension scheme when they are eligible to receive may not be as rich as their grandparents or parents, given that dramatic change of demography in this country. For senior people, how to use financial assets appropriately while factoring in life expectancy, which could reach in this country 100 years soon, and physical and or mental health deterioration associated with age is another significant issue. The elderly need high-quality financial services in addition to famous medical care or nursing. On the other hand, in emerging economies, as already stated, financial inclusion is a challenge. A survey by the World Bank has revealed that in low-income countries, bank account ownership was just 24% in 2017, while the smartphone ownership rate in emerging countries was 45% in 2018, according to Pew Research Center in Washington, D.C. This figure would be even closer to 80% when non-smart mobile phones were added. Rapidly spreading mobile technology provides a new platform achieving financial inclusion. To solve these social challenges, financial institutions are prompting innovation by strengthening their collaborative efforts with a variety of tech companies, from startups to big techs. We at MUFG are developing a number of new services deploying digital technologies. For an instance, PFM, Personal Financial Management apps, not only aggregate individuals' financial data from banks, brokers, and credit card companies, but also provide asset management services for key life events. Robo-Advisor provides massive users who lack the knowledge and or time to manage their own assets with easy and low-cost access to high-quality wealth management services. It is becoming more and more difficult for financial institutions to maintain face-to-face services, brick-and-mortar services, especially in underpopulated areas where the population of productive age group declines. On the other hand, internet usage rate and smartphone ownership rates among older generations are on the rise. By leveraging these trends, financial institutions are exploring online channels in order to expand their customer bases with non-face-to-face channels that enable users to access financial services anytime, anywhere. Consideration must also be made, however, for users not necessarily amenable to digital technologies. To this end, Designing user-friendly and more intuitive user interfaces are crucial. Providing opportunities to learn about optimizing smartphone performance may also serve to help eradicate the so-called digital divide. Another unique service we are about to launch against the backdrop of explosive growth in payment transactions in the era of IoT is GoNet, meaning Global Open Network. We have formed a strategic alliance with Akamai Technologies in Boston. It's the world's largest cloud delivery platform to provide an open payment network based on a new blockchain technology. This enables payment processing capacity of over 1 million transactions per second with a latency time of less than 2 seconds, by far more powerful than any other existing blockchain-based solutions. We believe building a robust and reliable financial infrastructure is also our critical mission. While financial innovation is a useful tool, as I commented, in overcoming social and economic challenges, it also poses new risks. Let's now look at the risks that may emerge. We have learned 2 lessons from the financial crisis of a decade ago. First, it is essential to review the prudence of the financial system as a whole, in other words, securing collective resilience. To this end, it is important to establish a cross-border and cross-sectoral framework for supervisory coordination, focusing on merely regulating individual banks or banking sector will not be enough. Second, forward-looking approach is needed for regulation and supervision. Developing regulatory standards after another crisis will obviously be too late and potentially incur even more serious damage to the broader economy because the scale is growing. Remembering these lessons, I would like to touch upon 2 specific issues and regulatory challenges we face in an era of financial innovation. The first one is potential risk posed by tech companies. They may be coming up soon. The Financial Stability Board has indicated in its recent report that it will continue to monitor big techs engaging in the financial services and whether it poses material risks to financial stability. I agree with this view of the FSB that big techs may indeed expose risks. Big techs could leverage its existing customer base to provide an innovative user experience. That's good, excellent. However, the better the service, the more rapidly risks may emerge. For example, if a big tech as a non-bank simultaneously engages in multiple financial services, such as payment with a quasi-deposit account function and lending, they may incur bank-like risks such as liquidity and maturity conversion risks. Namely, rebundling could introduce such risks to the financial system. The risk may be substantially higher in jurisdictions where non-financial institutions are allowed to provide a wider range of financial services. In order to address those risks, regulatory actions may have to be taken to develop metrics to measure interconnectedness and contagion risk of tech firms, and based upon the analysis, these firms may also have to be subject to prudential and operational resilience requirements. Second, the emergence of blockchain technologies which we will discuss in the second session, those technologies have given rise to a so-called public blockchain network, a decentralized network where anyone can participate, such as Bitcoin. The important open question here is how can we secure the resilience of permissionless network over which nobody has control and no central administrator exists. Even in the case of private blockchain network, there are similar challenges. For instance, a group of G-SIBs, including ourselves, led by UBS, are engaged in the so-called utility settlement coin project, which aims to build a more efficient cross-border interbank settlement system, deploying private blockchain with reduced settlement risk and counterparty risk in a lower cost. To solve this problem, we may need to develop a multi-stakeholder governance framework, as Madame Lagarde stipulated already, which involves international organizations, regulators, central banks, and the private sector. Due to the growing interoperability of blockchain technology, regulators in each jurisdiction need to join hands to oversee these distributed networks. Let me conclude my remarks. Given that financial innovation has great potential, great benefit to solve social problems, both financial institutions and tech companies bear responsibilities to work together to address relevant challenges we now face or will potentially face in the near future. Having said that, for every light, there is a shadow in English. We need to ensure risks are appropriately addressed. As digitization progresses, it is important to be well prepared and establish a forward-looking regulatory supervisory framework to respond to new emerging risks before they become real threats to the financial stability in the future. To this end, let me reiterate, collaboration among public sector and private sector will be of critical importance now. Thank you very much.
Thank you, Hirano-san. You started your remark by referring to the establishment of FSB 10 years ago. The chairman of the FSB joined the audience right after the remark, that part. But I think he got the second mentioning of the FSB. Now I would like to turn to Caesar Sengupta. Caesar has two hats at Google. One is he's leading a Google Pay project, leading both technological and product teams. And also he leads Next Billion Users initiatives at Google. So he both have a technological, strategical, and the vision elements in the Google work. And also he's an engineer who holds 16 patents. So let's hear what Caesar should say. Caesar, please.
Distinguished guests, ladies and gentlemen, good afternoon. What is the greatest invention? Thomas Edison once said it was the mind of a child. Lee Kuan Yew said it was air conditioning. I would like to make a pitch for the humble smartphone, because it's likely the first device that all of humanity will possess. There are about 4 billion internet users in the world today, with another 1 billion coming online in the next few years. And pretty much all of these people will be using smartphones. And here's what's amazing about the humble smartphone. Your smartphone today has more computing power than NASA did in 1969 when they put man on the moon. It's also a portal to more knowledge than any library in the world. Let's think about that for a bit. Most of humanity will have access to more computing power and more access to knowledge than the most powerful organizations on Earth had just 50 years back. I'm a technologist, and I believe we live longer, better, and more fulfilling lives than our grandparents because of technology. Today, some accuse technology of being too enamored with funny cat videos or the latest game, and there is some truth to that. But technology isn't just the fun stuff. Technology is what we humans create to help ourselves. It's things like language and shelter and fire. It's about curing illness, improving education, and reducing poverty. Technology is human progress. And at Google, we believe technology is about solving the big problems, not just for a few, but for everyone. And one of the biggest opportunities ahead of us today is how we apply technology to the world of money. Moving money, saving money, leveraging money to drive growth. Whether you're an individual, a business, or a country, your ability to access modern financial systems can be pivotal to your success. In today's smartphone-enabled, always connected world, payments are unfortunately just not working for many people. Younger users today find their banking experiences too antiquated. 48% of millennials in the US are considering moving to a digital-only bank. And 1 in 3 millennials plan to switch banks in the next 90 days. The formal financial system is also not able to connect with many people in the world today. 2.5 billion adults in the world today are unbanked or underbanked. 2.5 billion adults. And the majority are women. Their lack of access has huge implications for children, businesses, and society at large. Besides consumers, payments also have an outsized impact on small businesses, who are the backbone of pretty much every economy. Some of you in this room want to move your countries from cash to digital, while others want to unlock more growth or drive financial inclusion in your economies. To do that, we need to leverage technology and deploy it at scale to solve these hard and real problems. Last month at our annual developer conference, Google I/O, our CEO Sundar Pichai pledged a more helpful Google for everyone. Building for everyone is a core philosophy for us. We know that we do better when we invite everyone in. Because Android is open source, there are 2.5 billion Android devices today made by over 1,300 different companies. And because Android is an open ecosystem, there are more than 1 million apps on the Google Play Store. It took a global community to put the smartphone into everyone's hands. And we think it's time for the global community to come together again to digitize economies. You know, there's a popular but deeply mistaken belief that tech and banks are somehow rivals. It may make for fascinating and great sensationalist headlines, but we believe that tech and banks serve users better when we work together as partners. And for Google, partnership with banks means products that work for everyone. Millennials, merchants, the unbanked, everyone. It means using our global infrastructure and our technology platform to connect more customers to the formal financial system. It means supporting governments as they move societies from cash to digital and transform economies from informal to formal. 4 years ago, Prime Minister Modi called for a digital India. And we supported the Indian banks, Indian governments, and financial institutions in realizing their vision for payments in India. With Google Tech and our knowledge of user experience, we created a simple payments app to work on the Unified Payments Interface, India's real-time payments ecosystem. Since the launch of Google Pay in India 20 months back, transactions on UPI, the central network, have grown 43 times, 43x. And while there are many, many players in India that use UPI, Google Pay leads in both usage and value. But what we are really excited about is some of the interesting trends that show just how inclusive this growth is. 2 out of 3 transactions takes place outside the top 6 cities in India. 2 out of 3 outside the top 6 cities. And the transactions come from over 300,000 towns and villages all across India. 300,000 towns and villages. And this was possible only because the Indian government, banks, and tech companies worked together as one. Other countries like Brazil, Canada, Mexico are considering how to use real-time payments to accelerate their economic growth. And we've been sharing our experience and learnings with them. And we're ready to work with any of you to help bring these innovations to your countries. But enough with the numbers. Let me end by talking about a real person. This is Vijay Babu. Vijay Babu owns a small laundry shop in Bangalore. He can't read or write, but he was eager to go digital to cater to the smartphone-savvy millennials who would come to his shop. A year back, he would have to pay $100 for a credit card terminal, worry about printed receipt, and wait days to get paid. But Vijay Babu's daughter helped him get set up with Google Pay on his Android smartphone. And today, he's able to accept payments remotely, he's able to track his transactions, and build relationships with his customers through Google Pay. Vijay Babu's success is an example of what can happen if government, tech, and finance work together. And together, we can, and we absolutely must empower billions more like Vijay Babu. Thank you.
Thank you, Caesar. Now I found that the next billion user project is an understatement. You are actually reaching out to 2.5 billion users. Now I would like to turn to Mr. Michael Punk. Michael now works for Amazon Web Services, which is the world's by far the biggest provider of cloud computing services, Amazon's most profitable arm. But before joining Amazon, Michael was an ambassador, trade negotiator, White House staff, lawyer, and professor. That sounds already a lot, but he's also the author of the novel, The Revenant, which was on the top of the New York Times bestseller list for 4 weeks, and the movie based on his novel, Revenant, starring Leonardo DiCaprio, won 3 Oscars. Wow. So, Michael, please.
So thank you very much for the kind introduction. I'll tell you in advance that I promise not to subject you to any really bad metaphors about bear attacks. I hope most of you are familiar with Amazon Web Services. I know most of you are probably familiar with Amazon.com, where perhaps you bought something someday. But what I thought I would start by doing today is talking a little bit about where the cloud came from. And it's sort of an interesting story. In the early 90s, a guy named Jeff Bezos decided that he was going to invent an online bookstore. And he knew that he had the need for large ability to store data online, process data online, and that he needed to do that in a highly secure environment, because those of you who were around in the early 90s remember that what you were told at that time is that if you ever put your credit card on the internet, that your financial life would be over. And so he needed to come up with tools that didn't exist in order to be able to create this online bookstore, and he did that. And it turns out that the tools that he created were of interest to lots of other people. And in around 2006, some people inside of Amazon had the idea that Amazon could sell services to other companies in a business-to-business model. And that's where Amazon Web Services came from. It's actually where the cloud came from. It was the birth of the cloud. And what the cloud really is the on-demand delivery of IT services via the internet with pay-as-you-go pricing. So why is it that people are so excited about the cloud? What are people talking about? Why is this such a big deal? Well, first and foremost, it turns out that the cloud is the most secure place to store and process data. And I'm going to come back to that because it's such an important point. Cost savings is a huge reason why customers of ours go to the cloud. There was an interesting study done recently, a survey of Amazon Web Services customers that found that the average AWS customer saves 64% on infrastructure, on IT infrastructure. That's an incredible number when you think about it, just in terms of savings, but also an incredible thing to think about in competitive industries, where, like financial services, where if your competitors are using a technology that's saving them a lot of money, it's important for you to do so as well. Agility is one of the most important aspects of why our customers use cloud. What cloud allows our customers to do is, if they want to experiment, they can spin up dozens or even hundreds of servers in support of an experiment. And they can use that for a day, and if it works, great. If they want to, the next day they can stop using it, and they don't pay for it because it's pay as you go. So agility gives our customers an incredible advantage in their businesses. Inclusiveness is something that we're most excited about with the cloud. And the Deputy Prime Minister talked about the democratization of technology. And what we find with Amazon Web Services is that powerful tools that might previously have been only available to the largest companies with the deepest pockets are now available to any startup. And that's an incredibly powerful force for democratizing technology. I mentioned that I want to come back to security because I understand how important that is to the people in this room. I came from government before this job, and I know that for policymakers and for regulators, there is perhaps no topic that is more important than security. And for Amazon Web Services, security really is job zero. And what's important to know about our products is that they are built for the world's most security-conscious consumers. So we're building in order to satisfy the security needs of the military, of financial service regulators, of the world's largest banks. And I talked before about the democratization of technology. What's exciting about Amazon Web Services security is the security that's built for those highly security-conscious customers is what's available as a matter of course to all of our customers. And that is something that we're very proud of. I always think that the best way to prove a point is for somebody outside of your company to make it. And so I wanted to put up a recent statement by Robert Palatnik, the Managing Director, Chief Technology Architect at the Depository Trust and Clearing Corporation. And he said recently that the financial markets expect DTCC to be there without fail every single day. AWS provides multiple services and multiple options for multi-region resiliency. They are well beyond what we can do on premises. We're proud of the validation that we receive from our customers and the trust that they place in us to make sure that the cloud is secure. I'm going to keep with telling stories about our customers because I do think that that's the most interesting way to make a point about the significance of cloud to the financial services sector. Nubank is a Brazilian customer of ours. And several of the speakers today have talked about the issue of the unbanked or the underbanked in the world. Caesar talked about the presence of smartphones as being something that eventually we hope everyone will have. And it turns out that the smartphone can be a way of banking. And what Nubank figured out is that by not having physical presence, that they were able to pass on enormous savings to their customers. Namely, they're able to not charge them any daily or monthly fees. It made banking much cheaper, and it has allowed Nubank now to have 5 million customers in Brazil, the largest digital bank outside of Europe, or outside of Asia. This is a device, Alexa, an Echo, that I hope many of you are familiar with, perhaps from your own home. But one of the things that Mitsubishi Bank is doing is it is using Alexa applications that it has developed to also make banking more inclusive for customers who might not be able to use computers, like the elderly or the visually impaired. And so they and other banks have developed applications, for example, where customers can ask what their balances are, or transfer funds, or obtain access to customer support. The last example I wanted to give is in the area of security. Capital One is a bank that has now moved all of its new applications to digital. They had, because of doing that, the need to make sure that their compliance was appropriate to this particular environment. And they actually came up with something called Cloud Custodian, which is their way of using the cloud to monitor and make sure that they are in compliance with appropriate regulations. One of the interesting things that they did is they made this available as an open source resource. So it's something that is available to not only their bank, but to other banks around the world. I want to end it today by going back to where we started, which is talking about the balance between risks and opportunities. And as I said, I understand very well that it is the job of regulators and policymakers to think about risks, and that's certainly appropriate. And we understand that there are lots of questions that regulators and policymakers need to ask. I also hope, though, that one of the things that has come through many of the presentations today, including mine, is the incredible number of opportunities that technology provides for the financial services sector. That certainly includes the technology of cloud. I'm very excited to be here today and happy for the opportunity to be a part of this conversation. So thank you very much.
Thank you, Michael. Amazon Web Services provides computing and also data warehousing, but at the same time, it provides solutions and applications. Is there a boundary between what Amazon Web Services can do or replace for banks and what banks need to do themselves? Can we imagine a kind of a future when banks will become just a thin skin put on Amazon body?
Well, I appreciate the fact that you pointed out that the cloud is more than just a place where data is stored. And in fact, the cloud is also very much a place where customers can use features and services. And one of the aspects of AWS that we're most proud of is the large number of features and services that we offer our customers. And that includes things like applications for AI and for machine learning and for the Internet of Things and for voice recognition. So many of these technologies that people are most excited about today are available as part of cloud services, and as I mentioned earlier, are available to all of our customers, not just the biggest bank, but the smallest startup.
Thank you, Michael. Cesar, Amazon Web Services allow banks to banking without computers. And maybe Google can allow banks to have access with customers, billion customers, without branches. Would the next billion users of internet broadly overlap with next billion users for payment and the next billion users for full banking services, or would they be different?
We actually think they absolutely will overlap. And in fact, if you think about it, the smartphone and users who come to the smartphone think about every business and every use case that they live in the real life differently. The way we used to buy things in the past is very different to how a user of a smartphone today does shopping on their phone. Let me just do this quiz. How many people here started using a laptop or a desktop before they touched a smartphone? How many people here? Just raise your hands if you used a laptop or a desktop before you got a smartphone. Pretty much everyone in this room. However, today, every new user who's going to join the world of computing is going to start on a smartphone and most likely live on a smartphone. And that is going to change every aspect of the world as we know it, including banking.
Okay, thank you, Cesar. Hirano-san, traditionally, banks are typically fortified by big branch networks, big mainframe computers, and a deep customer relationship. But maybe Amazon can provide mainframe claim to be more secure and cheaper, and Google can provide access to billion customers without branches, and maybe they have bigger data on some of your customers than your bank has. What would be the future role remained for banks as a kind of unique role for traditional banks?
Well, thank you very much for asking me a big question. Perhaps the best way to respond to your question is to think about the kind of matrix, by customer category and then product or services. So starting from the individuals, whether it's consumers or private banking business, and then commercial banking, SMEs, lending services, and then institutional banking, big corporate lending, capital markets, M&A, then the answer is very simple. I think the payment area for consumers would be dominantly provided by those new tech players, in particular big techs. And the other front, wholesale banking, institutional banking, probably that's tough being replaced by the new services. However, what we have to do in all those aspects of or spectrum of services and customer services is A, deploy technology as much as possible in collaboration with tech companies. What I'm saying is fintech companies are our friends, our ally. And big techs may be threat, may be enemy to some extent, but largely we can collaborate with them. So we work with many fintech companies to create our frictionless and real-time services for the clients. And then also we rely heavily on Amazon cloud for our whole banking services, from the consumer service up to the institutional services. And we put the slogan, cloud first, these days. And of course, we will continue to play the key role as a kind of the social infrastructure, and as the wholesale payment as well as the wholesale lending, and then act as kind of dam which store the water and supply the water when the farmers or manufacturers or households need those waters. What I mean by water is money. So whether it's sunny day, rainy day, we have to continue to supply and play those resilient role to support the growth of the real economy. That will not change. That's my view.
Okay. Thank you, Hirano-san. Then I would now like to open the floor to take the question. Please identify yourself at the beginning and ask only one question at a time. I saw Governor Villeroy Dugaro raising very high his hand. Governor Dugaro of the Banque de France, please.
Thank you, Ryozo. I'm the French governor, and I would ask a very simple question to Cesar Sengupta, because you described Google Pay and its impressive development in India and in other emerging economies. What are your plans regarding Google Pay and advanced economies? Conventional wisdom says that there is some delay here, some obstacles perhaps. It would be interesting to describe it a bit further.
Thank you for your compliments. Google Pay exists today in about 30 countries across the world. In most of the countries, what we've done is worked with the major networks, Visa, MasterCard, Amex, and the banks, the issuers, to tokenize it. So it's primarily a convenience and a security experience to bring it to users who are used to using credit cards. In India, we realized there were very few users of credit cards, as well as there was a unique opportunity where, as people were embracing smartphones, we could work together with the government and the big banks to create a better platform that got many more people onto the system. Today, Google Pay in India has 55 million active users. That's well above the number of users that over the last 20 years have adopted credit cards or debit cards. I think as we bring some of those learnings to other markets, we would want to study the market in detail, and we would want your advice and your help to understand what would make most sense in your case for France. How can we bring the millennials, the young people, onto the digital system? How can we help advance financial inclusion? What we can do is we can sort of think about all the unique user experience, scalability expertise we have, and then apply it together with some of the financial institutions in your country to co-create the right kind of experiences that make sense for France.
Okay, another question, please. The second line from the front.
Phirathai Santiprapop, I'm a governor of the Bank of Thailand. I have a question for Michael. There's a high possibility that banks will move towards cloud services. And in a small open economy like Thailand, most banks will end up using one of the few global cloud services. So this is the possibility that the whole banking system, the back end, the cloud services will be dominated by only one or two cloud service providers. How should regulator look at this increasing dominant risks by only a few cloud service providers from the technological perspectives and from the geopolitical perspective as well? There's a possibility that high big tech companies could become a target in geopolitical tension. Thank you.
Well, let me answer that in a couple different ways. First of all, I talked in my presentation about about security and resilience being job zero for Amazon in terms of making sure that our system is secure. So that's one aspect of this that I think is very important. A second aspect, I think, is that AWS provides remarkable transparency about its financial situation in terms of its situation as a company. And the last thing I would mention is that I think cloud is actually quite a competitive sector. Not only do we see competition from traditional technology providers like IBM and Oracle, but we also see strong competition now in the cloud sector from a number of big companies, whether it's Google or Microsoft or Alibaba. So we actually see quite robust competition in the sector.
If I can add one thing here, I think this is where it's really important for us to embrace standards. So a number of cloud companies have been working together on open standards. So as long as you build your applications and your services on top of these open standards, it's much easier to migrate between clouds should you need to do that. So I think that's another area where there can be more work done to create these common standards between companies.
Well, I'm sorry, I need to conclude the session. Perhaps the technological innovation can bring financial services into two broad directions. One is centralization, and the other is decentralization. And we explore the potential future direction of centralization of some of the banking function in the future. And the second session would discuss the decentralization direction. So to get the full picture, please stay tuned. Please join me thanking our panelists with big applause. Thank you.